What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to Watchlist Wednesday for Wednesday, November 2nd, 2021. Today we're going to be looking at a group of stocks that are in the financial services and financial innovation, or FinTech, if you will, sector. We're going to look at some of the leaders in the space and the ETFs you should watch, and then we're also going to look at some legacy plays that could definitely be worth a look in the very near future. So what we want to do first is hop over to this chart. And this is ARKF. And ARKF is part of the ARK ETF set that comes out from Cathie Wood's company. And this is the FinTech group. And you know, it had a very strong move December to January. It went parabolic. There were a lot of things running. And since then, it really hasn't done anything. We haven't seen a whole lot of movement. There's been some pretty gnarly sell-offs to the downside. But we've come back into, about this $54, $55 level 1, 2, 3, 4, 5, 6 times. And this time is a little bit different because what we saw with this most recent pivot in that we didn't see a full reset all the way down to $50 a share. So that indicates a little bit more buying interest and a little bit more of a positive auction. So I'm looking for, if this breaks 55, that's just going to be a sort of a wide open play in a lot of these names. Now, when I dug down and looked at some of the components inside of it, it's a little bit more of a grab bag. It's not just like Square. There's some other things in there. As an example, there's Shopify in there. We're not even going to look at it today, but that's included because it is technically FinTech when it comes to e-commerce. So what I want to first look at are some of the leading names and some of the names you absolutely need to be paying attention to right now. And then we'll go into some legacy plays. So the first one's Square, and Square is one of the leading stocks in this. Look at this. Off the lows from March 2020, it was trading at $30. It's currently trading at $250 right now. This trading range, it could be distributive and we could see a breakdown, but right now, the way it's setting up and the kinds of responses it's seen, we can't make that determination just yet. I am leaning a little bit more bullish on this just because we have been seeing a lot of momentum names running, but it's kind of a choppier mess over basically the entire year for 2021. But I am looking at this for upside if some of these selling wicks can clear. And this is, again, a weekly chart. So if you can tell, last week we had, let me see if I can paint on this really quick. Right here, yeah. Last week we saw selling as it pushed above 260. The week prior it had the same kind of problem. A couple weeks ago it had a pretty negative response around that as well. So if we can see 260 taken out, and it would require a little bit more work, then I think a takeout and hold, I think, would be a good way to put it, where it comes in, but if it pulls back a tiny bit, that's fine. If it starts to hold that bid, then you got to start looking for 270. If it breaks above 270, a lot of eyeballs get on this and momentum can just pile on into that. So that's the first one. The next one's Coinbase, and I was looking for some kind of a pullback and I just didn't get the full reset I wanted, so I've kind of been left behind on this trade. We've got this IPO failure right here, so as it comes into basically right now, if you look at this volume shelf from basically the entirety of the stock's existence, it's very thin air up here, and I'm not shocked that we're seeing some profit taking into this. If we can get maybe a 1 or 2 week just sideways action or some kind of a flag without absolutely falling apart, there definitely is potential for continuation in this name. Then we got Shopify. I said it wasn't on the list. Apparently I lied. It still looks okay. It's got some levels at 1550, which could come into play right there. But again, it's very similar to what we were talking about in Square. If it comes into it and sells off, but then it starts to hold that bid, maybe pull into some moving averages, some anchored VWAPs, I think that's a pretty good bet as well. This one's also a very attractive candidate for selling credit spreads for those of you that do want to play it that way. The next one is C, and it's continuing to stair step higher. Maybe if we get one more push, then you see momentum divergence, we can get a little bit more of a reset. But overall, this is a very clean trender. We've got a pretty clear trend line to work with. against, if I'm reading this right, that's right about there. We're going to draw that with a crayon. So just use that trend line as a guide. You can also take a look at some other moving averages as well. But that one, odds are, it's just going to continue to trend until we have evidence to the contrary. If we did see that trend line break, we'd probably see a reset to 310, and then we'd see from there. It'd probably chop sideways for a little bit more. Another one of distinct interest for me right now is Lending Club. I always get it confused with Lending Tree. This just had a massive gap higher. I'm pretty sure this was earnings, and it's seeing post-earnings continuation and a lot of momentum. Once it resets and develops some kind of a high and tight flag, that's going to be a very easy continuation trade, especially as it heads into its next earnings report. Next up, Zillow, and Zillow looks like hot trash. It's actually currently was at 77.5. Yeah, it's trading 77.5 post-market. They had a terrible earnings report. They're writing off a bunch of terrible trades on their end where they tried to start a house flipping business and they lost something like 300 million or something along those lines. This could have the potential for a bathwater trade. And a bathwater trade is when you've seen a stock continually grind lower, maybe see some capitulation, and then you have this nasty gap down on whatever bad news was plaguing the company. The best example I can think of off the top of my head is Apple from 2018. During this move right here, all right, if you can see that, there was a gap down right at the lows. Okay, so it had sold off. They weren't reporting iPhone numbers anymore. Tech as a whole was looking terrible. The Fed was way too aggressive in some of their adjustments to the upside. And then Apple releases this awful news and it's the low. And that was it. So there is a possibility, and I'm not going to say it's going to happen this quarter, but given what we have seen as it's pulled back from 200 all the way down to, where are we, 77 now, that could start developing a tradable low. I would actually like to see it into this volume shelf right around $67, and I would be very aggressive if it hit that level, especially quickly after its earnings event. We'll see if we get some blood. All right, so finally we've got some of the legacy plays. So there's this growing concern that Square and Stripe and Shopify continue to pull market share away from some older names like Visa, Mastercard for purchases, and then the other one that I can't think of off the top of my head, PayPal. That's right. So if Shopify is a payment processor and they don't necessarily have to interface with PayPal, they take market share and things along those lines. And a lot of these names have been taken to the woodshed. PayPal is coming into a very interesting level into the support. It's probably going to see maybe just one more day of blood, and then we'll see if we can get a pretty strong bounce. This does have earnings November 8th, I think. So it could be one of those where we have seen enough of a sell-off to price in the bad news it's already had. All right, so there's a very distinct possibility of that. So we've also got Visa and Mastercard, and Visa is continuing to trade like trash. If you wanted to get cute, you could say, okay, you can look at this measured move from these swing highs to these potential swing lows, and that would come into an internal pivot point right here, and you can see how that's interacted several times over the past few months. So that would be the ideal scenario. There's also an LVN right there that could provide some rejection. So that would be a name to watch as well, especially if it gets a little bit more oversold. And a very similar kind of thing setting up in Mastercard, where right here could be an okay tradable low, but there are some very attractive levels just underneath where you've got this internal pivot level right around 311. Again, I'm drawing with a crayon. These aren't particularly precise, but you can see how it has responded to it in the past. And just below that, you've got this very, very strong volume shelf right from May to July, and that trading range along with that capitulatory low should be close to a tradable low on the stock. That would require a lot more energy to the downside, but if we did get to those levels, I would also look to be very aggressive. So one of these names that we've already talked about is a new addition to our portfolio, Precision Volume Alerts. If you would like to get access to that as well as our trade alerts, what you will need to do first is go watch the special training that we've put together that shows you how I find these profit-rich trades. From there, you can then sign up as a member of Precision Volume Alerts, so I highly encourage you to do that. That's all I got for now. Thanks for watching. Have a great day.